Good morning and welcome to the World First Weekly Report for Thursday the 2nd of June. Well, over the last week we've seen a host of data come out for Australia and it's all been, most of it has been within expectations. Over the last week we've had a lot of data for Q1, and obviously Q1 was during the Queensland floods were during Q1, so we've seen a lot of weak data out to reflect the impact that the Queensland floods had on Queensland, which has obviously got a big focus on the resources sector. Over the last week we had gross operating profits for companies. We also had construction data out and GDP figures. GDP figure. The GDP figure came out at negative 1.2%, and this is obviously a reflection of the impact the Queensland floods had. There was some positive data out over the last week. We had capital expenditure out. That figure came out at 3.4%. This is obviously a figure that the Aussie dollar can leverage off over the next 3 to 6 months, and even though we've had some dire data out over the last week, it was largely interpreted as a positive for the Aussie dollar after considering the economic fundamentals out of the States. In the US, the economic data has not been positive for growth. The robust recovery that we've been looking for has not been continued this week, with a host of economic data out. We had data that included durable goods orders. We also had Chicago PMI, consumer confidence and GDP. They were all within expectations. Furthermore, we had the ADP employment change figure. That figure came out at 38,000. And the expectations were for 170 plus thousands. As a result of this may be a precursor for Friday night's preeminent jobless figure, non-farm payrolls figure coming out on Friday night. And should this be the case, we will likely see equity markets sell off in droves, and you should be looking for spikes on the $6 levels that we're currently experiencing. Over the next 6 months, there is the capacity for equity markets to go higher, and indeed some analysts are predicting it to go to 5 to 10% higher over that period. This is really off the back of the fact that companies have a lot of cash on their balance sheets, and this just means that there may be a hive of mergers and acquisitions to prop equity markets and push them higher. Should that happen, we'll obviously see the Aussie go tit for tat with that associated risk appetite. However, with the economic data continuing to look a little bit soft in the States, we may see that disconnect between the US stock markets and the economic data get removed. Look out for that data coming out on Friday night. If you'd like an update on the market or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your day.